This is the first episode of Woulda, Shoulda, Coulda. These are setups that I looked at, but for one reason or another, I passed. I didn't take them, and I did not use them for our daily market report. We've all been there. Why beat my head against the wall? Because at the end of the day, the setups we all remember, and therefore the ones we learn from the most, are not so much the ones that performed exactly according to our expectations, but are the ones that tempted us, but for some reason or another, we passed on. It's one thing to miss a setup, it's another to see it, shape up, and then pass. Here are my high fives for this video. The stocks and setups in the wheelhouse from yesterday we'll be looking at are IIN, FARO, LASR, Netgear, NTGR, and HFC Hollycorp, a refiner. First up on our watch list, which is created every weekend, is IIN. This watch list is made up of strongly trending stocks, both up and down, that are where the action is and look set for continuation. If you're a short-term trader or a swing trader, you need to be where the action is. I looked at IIN on Wednesday when I created the nightly stock report actionable for Thursday's trading. Here's why IIN set up according to my methods. First of all, it was in the +1, -2 buy position. Right here, this is Wednesday night. The +1, -2 occurs when the 3-day chart is pointing up. That occurs when you have 3 consecutive daily higher highs, and the -2 for the +1 part of the equation, and the -2 part of the method occurs when that is followed by 2 consecutive lower daily lows. They don't need to be immediately following a turn up in the 3-day chart, but anytime the 3-day chart is turning up and then you get 2 consecutive lower daily lows, that satisfies my +1, -2 buy setup. Moreover, this was the first +1, -2 buy setup since IIN broke out on July 18th, right here. At the same time, IIN had pulled back to its 20-day moving average for a holy grail buy setup. It reversed on Wednesday after testing the 20-day moving average for a holy grail buy. A holy grail is a test of the rising 20-day line. The first such test following a breakout is a great risk to reward buy strategy. IIN also left a 180 buy setup on Wednesday. This is simply occurs when a stock closes at near session lows, followed by a close at near session highs when the trend is pointing up. And in this case, the 180 buy setup, I define the trend as a stock that is trading above its 50, rising 50, and rising 20-day moving averages. So IIN had these 3 things going for it. It's one thing to see a setup, it's another to navigate it. Let's go to a 10-minute chart. And see how it played out. IIN gapped up, opening at 53, and immediately pulled back into the gap window right here. So it gaps up, pulls back into the gap window. However, when it triggered an opening range breakout, and by that I mean a breakout above the first 30 minutes range, which occurred right here, it extended, it exploded. You can see this. That was a textbook earnings gap and go buy play, an opening range breakout occurred right here following earnings. So this is a powerful earnings, a gap and go buy setup. A sharp pullback played out midday in INN as INN pulled back to test the opening range breakout right here. You can see this pullback that tested the opening range breakout, and that set up another buying opportunity, and it turned up and rallied to test session highs. Let's take a look at the hourlies. Was there any indication to sell the spike following the opening range breakout? There sure was. As I always like to say, price plays out in threes. Notice the 3-bar run up on the hourlies that defined short-term exhaustion right here. 1, 2, 3. You had this pullback that turned the hourly swing chart down, and then it tested the highs. So IIN looks exhausted short term. Next up is FARO. FARO, Faro Technologies, is a name that was on our watch list in the spring. It broke down on its last earnings report. Let's drill back so you can see this. Actually, we'll go to a weekly. Oh, this is a daily. That's why we can't see it. So you can see that it broke down on the last earnings report in the spring. It found low near its 200-day moving average, defined by a spike volume bottom. Now these charts don't show volume, but the volume exploded on this large range break to its 200-day, leaving a spike volume bottom. The stocks don't always advance strongly from this setup, but it defines a low and a series of higher lows, which worked out in the case of FARO. Over the last 2 weeks, I had noticed Faro starting to gain traction and act better as the market got hit. This was a sign of better relative strength. I saw that Faro looked like it was tracing out a low-level cup and handle. Right here, you can see this cup and the handle, and it popped out of this handle and left an outside day up on Wednesday prior to Thursday's explosive move on earnings. Now, the low-level cup and handle is not a reflection on the strength of the pattern. It's just to say that the cup and handle is not at new highs or at a high-level base, but in the middle or bottom of the range. So on Thursday, FARO continued and gapped up, offsetting the gap from the last earnings report over here. When it offset that gap, that's a powerful gap reversal signal that often signals a powerful move in the opposite direction of the initial gap. The gap reversal